Everyone knows the impact of Ozempic and Mounjaro. Their ability to drive weight loss is undeniable. We now even have more convenient options like Novo Nordisk's daily GLP-1 pill, which is launching at around $150 a month directly via Amazon Pharmacy. But despite these advances, there's a dirty little secret in the obesity market that nobody wants to talk about: the rebound. Data shows that up to 85% of patients discontinue these drugs within 2 years. And when they do, the biology fights back and the weight comes back. And let's be honest, nobody wants to be tied to a daily pill or a weekly shot for the rest of their life, paying month after month forever. So, what if there was a one and done procedure that could lock in that weight loss without the burden of chronic medication? Today, we're covering Fractyl Health, ticker symbol GUTS or GUTS. And the reason we're covering them right now is because they have a binary event, a massive data readout coming in literally 2 weeks, late January 2026. This could either change the standard of care for obesity or send this stock to zero. Let's dig in.
Biotech breakthrough stuns medical world. This is the pill that could change everything.
Let's look at the illness. We are not just talking about obesity, we're talking about weight maintenance. By 2035, it's projected that 35 million patients in the US alone will be using GLP 1s. But here's the gap: real world data shows roughly two-thirds of patients quit after 1 year mark. And when they stop, the weight comes back. Trials like Surmount 4 show that patients regain almost all their lost weight within a year of stopping. The medical community calls this the post GLP 1 rebound. It is a massive unmet medical need that currently has zero approved solutions. And this brings us to the Fractyl's flagship therapy, Revita. This is not a drug. It is an outpatient endoscopic procedure. Think of it like resurfacing a road. Fractyl science suggests that a high sugar, high fat diet damages the lining of your duodenum. That's the first part of your small intestine. This damage breaks the signaling between your gut and your brain, making you constantly hungry. Revita uses a balloon catheter to deliver hydrodermal energy, basically heat, to burn off that dysfunctional top layer of the lining. It takes less than an hour. Once that lining is removed, the body regenerates a fresh, healthy lining that can signal properly again. And here is a key detail that most investors miss. In their old trials, they tested various treatment lengths. In this new trial, they have standardized to a longer 16 centimeter treatment area. That extra surface area could be the difference between mediocre and game changing results. And now let's talk data because that's what really matters. They have two groups of cohorts that we need to watch. The first one, the Reveal 1 cohort, this was the open label, meaning everyone knew what they were getting. These patients lost weight on GLP 1s, stopped the drug, and got Revita. 6 months later, they essentially flatlined their weight, showing a change of only about 1.5% compared to the expected gain weight of 10%. That's impressive, but it was open label, so everyone knew they were getting it. And that is why we're waiting for the second group, Remain 1. This is the gold standard, a 2-to-1 randomized double-blind sham controlled trial. We already saw the 3-month data in September 2025. It was statistically significant with a p-value of 0.014, meaning that the Revita group maintained weight or lost about 2.5% more, while the sham group started gaining it back immediately. The catalyst here is that we're getting the 6-month randomized data in late January 2026. Now, there was a rumor that they paused this trial. That's false. It is fully enrolled. The company simply paused their separate diabetes program to go all in on this obesity readout. Here is a bullish signal. The FDA has already granted Revita breakthrough device designation. This validates the technology and speeds up the review process. However, we have to address the risks because these are significant. First, the biological risk. When we burn the lining of the duodenum, are we impacting nutrient absorption? There's also a theoretical risk of pancreatic inflammation or pancreatitis. But the biggest safety risk, the one that kept me away from this talk and others for a long time, is duodenal strictures. In layman's terms, a stricture is a narrowing of the gut caused by scar tissue. In their very first human trials back in 2016, they reported 3 cases of strictures. Since then, they have updated the device and protocol to prevent this, and recent trials have been clean. But here's my worry. These trials are being done by the absolute experts. Real world outcomes can be different. If we see even one stricture in the upcoming data, the FDA could slap a black box warning on the device if approved. It is very hard to convince a patient to undergo an elective procedure. There is even a 1% risk of their gut closing up. And finally, there is the durability risk. Ideally, this is a reset. But if a patient goes right back to the high sugar diet, does that damage return? We simply don't have a 10-year data yet. So, who are they competing against? Really, they are competing against lifetime medication. There's no other approved procedural therapy for maintenance. You have bariatric surgery, but that is invasive. You have the GLP ones themselves, but they come with nausea, muscle loss, and high costs. Fractyl is trying to create a new category, the off ramp for GLP 1s. Now, who are they? Fractyl Health is based in Burlington, Massachusetts, and their mission is clear: redefining durable weight loss maintenance. The CEO is Dr. Harit Rajagopalan. He is a co founder and a cardiologist by training. Why do I like him? He isn't just a business guy. He did the original research identifying the duodenum as the root cause of metabolic disease. He has real skin in the game. Now, let's get into the hard numbers. I pulled their latest filings as of January 10th, 2026, and here is the snapshot. Cash on hand, 85.6 million. Total debt, 30.8 million. Shares outstanding, approximately 153.4 million. They have stated this cash runway gets them to early 2027. This is a relatively healthy position for a pre-revenue biotech. But remember, if the data is good, they will raise more money to fund the commercial launch. Dilution is coming, but if it happens at a higher share price, that's good dilution, I guess. Now, let's speculate on the market. Bears will tell you this is a niche procedure. They're wrong. Fractyl projects that by 2035, there will be 35 million Americans on GLP 1s. The real market is the millions of everyday people who are tired of the nausea, the muscle loss, and the monthly cost. I'll give you a personal example. Even my wife is considering this. She sees the value in a one time reset versus a lifetime of medication. As the CEO, Dr. Rajagopalan, puts it, hope shouldn't require a lifetime subscription. That is a powerful argument. If Fractyl captures even a 1% of the projected GLP 1 market, that is 350,000 procedures. That's mind boggling. And well, they are not trying to do this alone. They have already signed a letter of intent with Barriendo, a major network of endoscopic weight loss centers in the United States. If they just charge $10,000 per procedure, even a fraction of this market puts revenue in the billions. And I know $10,000 is a lot of money, but for medical procedures, it's nothing really. So, what is the stock actually worth? I've modeled this out using 3 scenarios. And here's the math. And going with the bear case first, safety failure. We see a stricture. The FDA probably would slap a black box warning on it. Commercial viability evaporates, even if approved. And in this case, the stock trades at its net asset value. We take their 85 million in cash, subtract the 30 million in debt, and we're left with about 55 million in equity. And that's 36 cents a share if we see a bad readout. This would be the floor. If the technology fails, you're looking at an 80 to 90% loss from here. Now let's go with the base case, which means good data during the readout. The FDA approves it, and then we have a slow adoption. No strictures, of course, but Wall Street remains skeptical about how fast they can scale against cheap oral pills. Here we look at $7.50. The base target then is about 3x to 4x from here. Now let's look at the bull case. The data is perfect, and this becomes the standard of care off ramp for GLP 1s. And how do we value this? We look at peak sales multiples, and if they just capture 1% of the market at $10,000 per procedure, that is 2 to 3.5 billion in revenue. A conservative medtech multiple is 3 times to 5 times peak sale. That implies a future valuation of at least 10 to 15 billion, at least. Discount that back to today, you're looking at a market cap of 1.5 billion to 3 billion at least, which means a share price of at least $10 a share. My plan, I already bought a 2% position into this stock as this is an asymmetrical bet. The downside is 36 cents a share. The upside 10, 15, 20. As always, this is not financial advice. Do your own due diligence and let me know in the comments. Do you think a one time procedure can really replace a lifetime of drugs? I'm Wasim Larusi, and this is the Biotech Investor. I'll see you in the next one.